Hi friends, now we are going to take up discussion on cash cost of working capital. In the previous lecture we have seen that you have the cash cost, full cost basis I have already explained. And then now we are going to discuss the cash cost of working capital. What is cash cost of working capital? First step. The cash cost of working capital refers to the exact amount that we have to invest for running the day-to-day operations. When you say exact amount, you have not consider profit. Profit is not an investment. Depreciation is also not a cash outflow. So we are going to eliminate both of them. Why do we do this? We do it for the purpose of management to know exactly how much investment is required to run the day-to-day operations. Because as we already explained, the objective is to keep as low funds as possible and run the business effectively. Because working capital investment also will be part of the capital that is going to be invested. Now, it's very simple friends. The same concept we are going to take up for discussion. So in this problem, we have seen, I'll take up the problem before same manner computation is also going to be very similar to what we have done, except that the cost of these things, manufacturing overheads does not include depreciation. That means you are going to value debtors, finished goods at manufacturing cost less depreciation, whereas debtors will be valued at cost of sales. Cost of sales is inclusive of administration overheads and selling and distribution overheads, but not including profits and depreciation. That's all. So this is straight away we have to explain you through the problem, and I request you to go through this problem. Same problems will come, one has to be very careful in reading them. Following annual figures relate to XYZ company. Sales is 2 months credit. Material consumed. There itself it says that annual consumption is 9 lakhs. Suppliers extend 2 months credit. Wages are paid monthly in arrears. Total wages are 7,20,000 and 1 month is 60,000. That will be paid after 1 month. Credit allowed for wages. It's like that. Then manufacturing expenses, including depreciation of 2 lakhs is 11,60,000. So that means you are going to take out that 2 lakhs and you take the actual cash manufacturing expenses. Total administrative expenses paid as above. Total, that means annual expenses paid above means 1 month in arrear. Sales promotion expenses paid quarterly in advance. So total sales promotion is 1,20,000 per annum. But how are you going to pay? Quarterly means 1,20,000 by 4, 30,000. So first you pay, paid in advance, prepaid expenses. The company sells its products on a gross profit 25% counting depreciation as part of the cost of production. Actually that statement was not required. In fact it confuses the students. It keeps 1 month stock each of raw material and finished goods and a cash balance of 1 lakh. Assuming a 20% safety margin, work out the working capital requirement for the company on cash cost basis. Ignore working process. I think 20-30 problems are there in CA, ICWA, all exams. So very simple friends. The first statement that I have given you, production cost statement you have to prepare. The production cost statement is given in total amount per annum. So in this problem, material consumed is 9 lakhs. Wages per annum 720. Manufacturing expenses excluding depreciation 9,60,000. So the total manufacturing cost is 25,80,000. So administration expenses 2,40,000. Selling expenses 1,20,000. Cost of sales is given 29,40,000. Now, same manner as explained, very simple. So first production cost statement is taken. Raw materials is 9 lakhs per annum. 1 month 1 by 12 of 9 lakhs 75,000. Work in progress is giving nil. Finished goods 1 by 12 into 25 lakhs 80,000. Debtors is at 29 lakh 40,000. That is 4 lakh 90. Sales promotion expenses paid in advance. It's called prepaid. Cash is 1 lakh. Total is 9 lakh 10,000. Sundry creditors for goods is 2 by 12 into 9 lakhs. Here friends, one very important point you will realize. We said that raw material is taken on consumption. Whereas, how can you take creditors are also on consumption? Creditors should always be taken on credit purchases. Debtors should be calculated on credit sales. So therefore, when there is no information friends, we presume consumption is equal to purchases. How do you say you will presume like that? Carefully listen to this point. Consumption, stock levels are kept the same, that is assumption. Opening stock is equal to closing stock. Therefore, opening stock plus purchases is equal to consumption plus closing stock. If opening stock and closing stock are same, then consumption is equal to purchases. Suppose, very carefully remember, the problem gives it's a new company. Estimate the working capital for a new company if it gives problem says that. That means opening stock will be nil. So purchases will be equal to consumption plus closing stock. That is very, very important. So rule number 1. Raw material should always be calculated on consumption. 2. Creditors for goods should always be calculated on credit purchases. Normal problems, if you see you are calculating on consumption, on the assumption stock levels are same. Opening stock is equal to closing stock. But by chance in the exam they give you new company, then new company will not have opening stock. Therefore, consumption plus purchases will be the opening stock, the credit consumption plus closing stock will be the credit purchases. Be careful of that. Other than that, this problem is over. So this completes cash cost of working capital. So a number of problems are there. We have put one more problem for students to see and then do it. That's all.